The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 26th of March. Almost wrapping up the month. We're going to look at that monthly candle. Look at that monthly candle in the Dow. Chapman Wave Red Roman candle. Just 3 months. Is it that 3? I need to check to see exactly when the high was. Oh, the high is 4 months because it was, remember, 45,070 something and then 45,050. Just missed it by 20 points. Going to a new high. Leg E going to a peak E in the monthly chart. I'm watching this one closely because that Chapman Wave Roman candle has been there, usually either the exact high or within a 1 month of a high, usually in the S&P. That's given us clues for major sell signals. So far, this is acting pretty well when you think about it. Look, all the technicals are very strong. So we've got the Dow right now up 192, 42,779. Remember, I like to put in two patterns. One is a positive, one is a negative. And this cup formation has done almost what it needed to do. It needs a little bit more to get to the left side high. It's got another two sessions to do it in. No, 3 sessions. And that's to get to this high right here of 42,970. Today we got to 42,000. Oh, no, it's not 42,821. It's this high right here, 43,135. So if that's the case, so far everything's good. And the day is young. But isn't that pink 9-period moving average just about a turn cross positive? But I need that stochastic to be over 80%, and it's 70%. It's still lagging. Anyway, we remain along a new position in the aggressive small position in the Dow, and so far it's working out quite nicely. What I am looking at is that weekly chart. Thank goodness that Chapman Wave inside track repellent zone at 40,661 on the 13th gave a really nice lift off. That was really important 3 weeks ago. So let's go. Also, I'll give you the support, 42,375. If 42,375 in the next 2 days, if that's taken out, I think that 9-period moving average reverts back to a deflection to the lower point, and that would not be good. SPX.X, that's the S&P. Down 15 at 5760, very important. Look how it's expanding instead of contracting. Right now, it should have been going up towards the black 14-period moving average so that the pink can turn green. It hasn't yet. The stochastic's still only at 66%, not good. MACD's excellent. On-balance volume has rallied quite nicely. The relative strength index is making higher highs, but we need more to see. 58.20, I think, would be a great number by Tuesday of next week if we're able to get a decent close today. I think that's going to be tough. QQQ. The index 100 trading down at 489. Yeah, making a peak B almost certainly today. All the technicals are. They mix. The 9 is 14, was about to cross positive, and now it's kind of negative. The MACD's rallying. The relative strength has just pulled back. The stochastics at 60%. I need 80%. So the on-balance volume is very weak. So the QQQs have a very mixed personality right now in the daily chart. If you go to the SMHs, they're failing. They're just not doing what they should be doing. And that to me is a worry in the bigger picture, because normally I say where the S&P, where the semiconductors goes, the SMH Van Eck semiconductor ETF is generally where the market is going to go. And here it is stalling within this rectangle, certainly making an arch formation. Man, I got to respect that and say, that just says to me that we might even have to look at the SOXS, which is the 3 times short, the semiconductors, because if they start to fail, right now they're not failing, they're just not looking very good. All right, so with that said, I want to go IWM. IWM is down 8 cents at 207.62. Holding okay, but okay for the semis is not good enough. This takes me to a question I had about the XLF in the DAN. could I do an analysis? Yeah, this is a strong leg C. In fact, the 9-period moving average yesterday crossed positive. The MACD is expanding very strong. The 9-period differential is way over the 26-period exponential moving average. The RSI is strong. And the stochastics at 78% and rounding strongly. That on-balance volume is very weak. That's a little bit of a worry for me. But price is price, and price is the determinant of trend. And right now, this is in a buy mode. We've gone from a buy signal, upgraded at the close yesterday. I didn't actually say it, but because it was at the close. But today I can say it's a buy. And look at this beautiful uptrend, up channel. So the XLF, very good. It'll fail completely if it goes back to the 50.83 right now, up 39 cents. If it closes under, certainly 49.30 would say to me, we've got to be careful. But under 49 says failure pattern. All right, but right now it's doing okay. Even more importantly, we wanted to be looking at the relationship of the S&P Select Financial Spider Fund, which has the very best, the biggest of the money center banks. It even includes Berkshire Hathaway, BRK.B. This is really helping. I mean, look at this. Berkshire Hathaway, all-time high as we speak at 535.14. Brand new peak A, peak B, leg C. Unbelievable. You could have just bought Berkshire Hathaway back in 22 at the low of 250. And there's, you know what? Warren Buffett will just look after me. I don't have to do a thing. And look at this, peak A, peak B, peak C, all-time high. And, of course, this is Mr. Fundamentals. He, not everything, but a lot that he does is based on fund. He owns the companies, and that to me says a lot because it says that he doesn't just have the stocks. Many times there's a huge chunk of whatever it is that he is. Didn't he buy CVS, a lot of CVS, or was it Oxy? He did have Oxyana, 484.55, 484.72. I like to do this because I like to be ahead of the game in the Chapman wave methodology. So I'm going to say the weekly chart of Berkshire Hathaway has gone to a phantom peak. It's just a few cents higher. So I'm going to use this because if you look at the on-balance volume, you had a little ictus, a little turnaround there. So it says that gives me permission to be ahead of the game, to call that a phantom peak A, and I'll make it red or pink. I change the color so that I know I've used it legitimately in the Chapman wave methodology. I haven't you can't arbitrarily change your methodology because that's form fitting. I don't do that. So this is a leg F. We're calling it an F for now in the monthly chart. So as it stands right now, Berkshire Hathaway still has more to go to the upside. Very strong. All right. So I was looking at KRE as a relationship of the financials, XLF, to the smaller caps. That's doing very nicely for the first time. I'm kind of impressed. Yes, I even have to, I can wait a day. But technically, I should put an up arrow in. No, I have to put an up arrow in because it's certainly in a buy signal. It is in a buy mode, which would guarantee that not guarantee, but it almost assures that you can go to at least a higher high to leg D. But in the meantime, it's hit the 200-period moving average just as IWM did, and it's running quite nicely. So that's the regional bank ETF, the KRE. Thank goodness there's a relationship there. I'll be back. Dow's up 211, S&P's down 14. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So look at this, a measured move from left side to the right side called bar symmetry in my work. And what do we get? We get exactly, it's 1 day late. This is the XLE. The XLE is the is this S&P Select Energy Spider Fund, doing fabulously, up $1.51 today at 94.73. Let me just draw this in right here, lopsided cup, and it broke out. So this is the Chapman Wave cup and ladle pattern, which says that if you take out the left side high, especially if it's at a D, E, or F, before you've gotten to a D and does that in leg C, it should go high, and you should still expect a leg D. That's the that is the daily chart. The weekly chart has a target in the 98s. It's at 94.74 right now. The 9-period moving average. I looked at this the other day and thought, gee, that's interesting. What's going to happen with energy? But here we are for the second week. It's green, the 9-period moving average. That is really important. And look at this kind of mini up channel that you've got in the monthly chart. And that just says, let me just make this. I did it very quickly. I need to do this a little clearer. Look, here's your Chapman Wave. I'll make this low one red or pink to say if you break underneath that, there's a big problem. Of course, you've got to hit the right color right there. And this one, I'll make green, and it went right to the inside track propellant zone, and it's taken off. I like this very much. That, to me, is an indicator, that especially now that you've got crude oil running strongly. Remember, it was just stalling. I said, how does it handle, and what letter will it be when it gets to the 69? I think it was 35, 200-period moving average at 69.35. Here it is. It hit 70.01, and it is acting very well for 2 sessions now. You had the green 9-period moving average. MACD's running stochastic actually at 87. I like this very much. I think crude oil, for the first time, I can say this is a breakout to the upside in crude oil. The high that we need to take out is 17.39. That was on the 3rd of March. And here we are at 70.01, only in leg C. The next level of resistance will be 71.05. All right, I like this very much. Let me draw in what I normally would do. I draw in both the rectangle, then I draw in the lopsided cup formation, the gravy cup, I call it, because it's lopsided. Gravy. Here we go, lopsided. And now it says that by measured move, let me do this carefully now. Don't get too excited. I can't do it to the, well, I can do it to the low. The low, nah, that would be today or tomorrow. I'm going to be a little conservative and go to the next peak rather than the tiniest candle. That's usually the clue right there. Now I'm going to click it on there. TradeStation has really nice tools. And go right there. And lo and behold, we've got an inside track with a Chapman Wave inside wedge target repellent line. Right, it's hitting it today. Oh, isn't that exciting? That says that the 71.39, did I say it was 71.05 level could be hit by the 31st of March, which I believe is Monday. Check my calendar. Monday it is. Change that to from gray to a dashed green. This becomes a Chapman Wave inside wedge. Talking and doing things at the same time. Inside wedge, target repellent line. All right? So that's looking much better. Now we're looking at crude oil. Next thing I want to look at is, where was the question? So I did that. Yeah, the FXI, this is the China large cap, is turning down. Remember I said I think this could very well be a peak in the FXI after a spectacular move. iShares China large cap ETF. Can't put a down arrow yet, but it's just about across negative at 6.08. Had a double top. Remember that exact double top, 38.73 to 38.73 on the 19th. I may as well put it in. 38 point. Did I say 73? I'll just put 73 times 2, and the date was the 3. I can't remember what I said. No, I'll just make 21 and then I'll change it when I check it out. Yeah, so 38 on the 19th. Okay, 38.73 on the 19th. At least I got part of it right. Okay. Yeah, okay. So that's just says that it is falling. The MACD is down. Relative strength is down. Stochastic is very much down to 35%. On balance volume is turning down, but the 9-period moving average hasn't crossed negative. The next thing is XPUNG. I think that's how you say it. XPUNG, I'm learning. XPEN. Oh, I didn't do that right. XPEV. Oh, yeah, that definitely. That's in a sell mode on the downside, the daily, not yet in the weekly, at a beautiful top in the 27s. And now it's at 20.49. Whoa, that's a 20-something% decline. XPeng Inc. designs, develops, manufactures smart EVs. So let's just do, we're on EVs, we'll do Tesla. I've got a lot to do still in my preamble. Tesla's down 13. I think that rally could be it for the moment. Let's go to the Dow's now only up 147. S&P's now down 24. Gosh, got out of my short position a little too soon. Yeah. Okay, so now what we're looking at is that's that. Next question. Oh, Basil, what was that stock with an X that you were talking about the other day? A low-priced. It just kept going up. That wasn't X's. Oh, this is going up. This is interesting. This is U.S. Steel is looking very good. Hey, what about tariffs? Oh, I think I'm getting. I saw this yesterday, and I said to myself, something's going on with these tariffs. Look, Boeing is holding really well in the higher range. The SLX is holding very well in its higher range, but still down a lot. That's the Van Eck Vector Steel ETF. But if you look at individual stocks, yes, X. Oh, what was it? The question? Yes. So X is, you're talking about XERS. Oh, man, it just went to a higher high today again. Yeah, this is Xeris, XERIS. Biopharma Holdings develops and commercializes advanced products, injectables, etc. Look at this leg D in the monthly chart. Unbelievable. Now it's going halfway. Well, no, it hasn't gone halfway into the wick of 2021 in the monthly chart. Leg D in the monthly chart. And it's gone in a straight line move from 4 to 588. Right now it's at 599. It hit $6 today. Yeah, I mean, I don't know. Any day you could have got into this, it would have been great. Coming up with a question, I'll be right back. With a few more questions. Be right back. Basil Chapman, Dow is up 158, and he's down 26.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. And so a question came in actually from a subscriber about Hood, Robin Hood. It's trading right now down 251. I'm not sure quite what the story is. Oh, and I can't find it from that other. I don't know what the story is, but it's down at 45.60. So we were long from a long time ago, but the latest long, we went in, and I said that this is acting very well, but it's right at a level that is going to be giving us an important amount of information because the 9-period moving average did cross positive today. So the question came in. So with this latest long, we got in at Robin Hood. Let me just check. I've just got to check that I've got the latest. Yeah, the latest was at 46.10 a few days ago. Was it yesterday? Today's the 26th. Yeah, a couple of days ago. And the stop was at 46.40. So we've made a little, just 30 cents. But this is a deeper pullback, even though it's just a peak C and everything. Look, the 9-period moving average is still strong. The MACD is good. Stochastic is good at 78.03. But this is the whole thinking. Now, just to go through it for subscribers, I said that there's a rally. How it goes into Wednesday at about noon, 1 o'clock, how it goes into Wednesday early afternoon is going to be absolutely imperative because I anticipated that the Dow would rally at least into Tuesday, maybe Wednesday. And then we get a test of a lot of things. Robin Hood, every time the market even that raised its eyebrow, it would rally. So this says to me, together with the SMHs, just on the very short term, look, the SMHs are down 5 at 224.58, that at this exact moment, we've got to be a little bit careful. So the question was, do we go back in? Do we add to the core position that we have down in the 16s, and we've taken a little bit off on the way up to the high? I'm saying I still want to be careful. I can be thinking one thing, but price movement is, to me, the price is the arbiter of the trend. And right now, the major trend is still up in Robin Hood, but I don't know. Maybe someone in the den knows something about Robin Hood. Why? And I mentioned this to Jacob when I was being interviewed yesterday. I said it's still acting really well, but I need to see how it can break into the 51, 52 level, because then my target could be up in the 54, 55. But until it really breaks nicely into 51s, you got to watch it closely. So I'm going to say I'd rather be buying strength than weakness just at this moment. Only why? Because we've used up from the 13th, we've used up over 2 weeks of rallying. So that just says to me, the market has to now prove itself in a very different way. And we've got a rotation going into, yes, 48 round number high, thank you, Zip, today, and it's pulled back from that, but I don't know what the reason is for it pulling back quite so sharply. If it was down 80 cents or something, I'd say, or $1 even, but $2.54, down to 45.33, when yesterday it was touching almost the 50 level. Now, to me, that's a little bit too much just on the short term. So I'm going to be careful. I'm going to say, let's wait. We'll get back. I do believe that it should go to a D. I don't know if it'll go to an E. But and there's nothing wrong on the way up to have a bit of a rest. To me, this is just a little bit too much. And it says, I want to see what the close is today. I want to see where it closes. So you could be missing a great opportunity. I'm sorry, but I need to do this. Look, here's the 120-minute chart. It went to a peak G. That's why I didn't want to add anything. That's why I put the stop in, because if it was up yesterday at 49.88, and now it's at 45.65, that's quite a dip in price and percentage. So let's just hold off. And you can see the 200-period moving average is almost there in the 120-minute chart. MACD's just about, it's just fractionally positive. The stochastic's down at 73%. I need to wait we've got lots of time. I don't want to get into a rush about anything here. We've got time. If this is going to be a rally that goes into early April, we'll survive the day. In the end, the Dow will close up 250 or more. The S&P will come back nicely, maybe even close up 2 points or 3 points. Let's just see if that happens, and then we can go back into Robinhood as a trade. But right now, it's just saying be careful. So it took a little time to talk about that. Yeah, thank you, A2. XERS, one of those on my watch list from long ago. I know, I've had this, and I've been talking about it. And every day we could have, even today, you could get into this and say, well, prove me wrong. XERS. I mean, this looks like it's just about a pullback, right? Not serious, but pullback. And it's a little scary when you get in. But you put in your stop, and that's the way it is. But I have not done that. So, Xeris. Okay, next thing is in the den, XOP. Yeah, so this is the S&P one. How many times do I have to notate this darn thing? It's trading at 135.09. You know that from its inception, I've notated this one. Anyway, it must have been bumped off into my library. And I'm not going to go and find it right now. I'm just going to take a second to notate A, B, C. This was, you've got to always go to the low and start your count. A, that's an A, that's your low, that's your starting point at the 200. Man, that 200 period moving average, what a miracle it is. Look at that. It goes right to it. It's way up in the 150s, 60s, and it comes down to the 119 or 115 area, tests the 200 period moving average, and then says, whoosh, electric shock. I'm on my way back up. C, D. Let's just keep going. So there's D. That is either an A right there, and that becomes an E/B. And then it fails, it takes it out. So this is a brand new A, a B minus. You can see it took it out. This is an A minus because it made a lower low. And that's another one. I'll just put this in as a new A. Is this going to be the continuous failure pattern? No, look at the unbalanced volume. Right, the ictus, right at exactly, there's the low, right? That's the exact low on the unbalanced volume. Leg A, above the 200 period moving average. Yeah, the XOP is starting to move very nicely. A, B, C, D, E, peak E, back in 2022 at 100 in the 170s. And now it's arching over, but it's actually holding quite nicely. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So we're looking at the XOP. This is the S&P Oil and Gas Exploration Fund. Now you see this monthly chart right here? Look, if I had to go like this, I'd make a rectangle, right? There's your rectangle. If I went and pulled the higher one from the all-time high, that was, or the high at 170.62 from June of 2022, and dragged it to the high that was made at peak C, and then go to this chart, have a look. I'm not going to tell you what it is. You can look and see what it is if you can read the letters. But look at this. See this chart? Doesn't that look very much like what we just saw? This is the semiconductors, and it's done the same thing. It's the same pattern. I've used this with the inside rectangle, the large rectangle, the arch formation, the fact that it's holding well. I'm going to go back to that XOP. There's the same pattern. It happens to be a monthly chart, but patterns are patterns. They don't care. They don't know the monthly charts. And that just says to me, you've got to treat this, you can treat it aggressively right now as a trade, because the daily technicals are very good. The weekly technicals need a lot of work. So the 200-period moving average is at 136.50. It's trading at 134.93. Had a question about SLB, which is Schlumberger, SLUB they used to call it. This is a way nicer chart on the daily chart. Look how it's breaking out from the low that was made in the 38 area right to the 200-period moving average resistance. So it went above it to 43.35. 42.94 is 42.91. It can't be. 43.03. is a 200-period exponential moving average, and that's been a resistance right now. The last time it was there, it failed at a peak D back in mid-January. It screamed up to the 44s and then failed, and this is screaming to the 43s, and we'll see. It's only a leg C in this case. That's a good sign. So I'm not going to get carried away. I'm going to say I think we've got to treat this as a near-term positive. The weekly chart of Schlumberger SLB is the symbol at 42.95, up 58 cents right now. Needs a lot of work to get to the 44.78 area. It's just less than 2 points away, but yeah, it's where it's got to go. Look at that on-balance volume, and both in the daily and the weekly. There's no volume that I can speak to. That's a worry. So all I'm saying is treat this first as a trade. And then if it keeps going and it holds well, the technicals will improve. This is where price determines the future of the technicals. Sometimes it's the other way around. Okay, so with that said, yes, I do like it. Another question came in. Oh, I just wanted to clarify. So the question is, add more here for final leg D and up. Well, first of all, be careful with the word final. It's just to accomplish in the Chapman methodology what would be the normal thing to go to in a buy mode, which it is, should go to a D. So I don't know about an E, but we go one step at a time. I can have the back of my head. I can have a whole bunch of things Robinhood we're looking at. But the fact that it failed to get to this first inside track repellent zone in that leg C, and by today getting very close, it just says to me, you remember you like to look at two patterns? The other pattern is the arch formation, and it could fail and start to roll over at a peak C. Usually it doesn't happen at a peak C, it happens at a peak B. So therefore, the 9-period moving average is suggesting that it's still doing very nicely. So this is what I'm going to say. If you were in on the original entry in 16s, you've got a lot of comfort. You can at least attempt to, because we've got a little profit, you can use some of that profit from the quick trade that we had. You can use that 40 cents to add to any position. So if the 9-period moving average and 14 cross positive, but I would say that they are at right here, 44.42. So that's another $1.25 lower. I wouldn't be playing for $1.25 right now. I would rather say, you know what? I'd rather lose that $1.25 going to the upside. So if there's a reversal, and we don't know where it closes today, but if by Wednesday, if by Thursday, sometime Thursday, it goes back to the 46.50s, $1 up from here, I think then you've got a chance of saying, hey, it's holding support. It hasn't filled the gap because this is from 3 days ago. It's got the gap that could fill, and the high of the 21st was 44.73. So I would hold off. This market looks to me, this is the Wednesday. This is exactly what we were talking about. What happens from Wednesday at the close going into Thursday? Let's hold off a little bit. I could say to you, hey, have a little nibble here at 45, 47. I don't like the redness of this candle just on a daily basis. I would love to see it close much higher off the low going into the end of the day. All right, got that out the way. Now let's go to a couple of other things. I said that today I would be looking at the copper because it had such a good move, and now it's gone up to leg D. So look at this, SCCO. This is one of the leaders in the copper area. Southern Copper does molybdenum, zinc, lead, silver, gold in Mexico and Peru. Sharp move today. Who would have thought that at this peak B, it could pull back almost 4 points to 97.51 after yesterday it was tootling along very comfortably at 103.67. Let's look at TGB, which is this went to a leg F/B. This could be Chapman wave double MACD M-shaped formation. We'll see, but it did spike all the way to 254 today, and now it's at 241. Something's not quite right. Let's go to FCX, which is Freeport McMoran. Yep, same thing. But this is really, there's no other way to count this, but this is a leg A and a leg B. Oh, this could be one momentary pullback. It could be an opportunity. But you know what? From what I've read and what I've heard, I haven't studied it much, but I'm just going by what some people have said to me, and that is that copper was running up based on the tariffs, and that there was the implication was that other countries weren't feeling the same thing with the copper, but America would, under the whole tariff panoply of rare and what. So that's the reason why I did. And if you look, the copper stocks have done nicely, but they haven't. Look, SCCO, type it in over here. So Freeport McMoran had a very nice rally. SCCO had a really strong rally. But if you look at the weekly and monthly charts, TGB, I don't know if that's the one that I should add. It's just a little minor Taseko Mines Limited copper. Actually, it's had a much nicer chart looking at this moment than the others. They haven't been following. That's kind of the story of the GDX, where I'm still waiting for a leg. Oh, peak C1, C2. Oh, I've got to talk about that as well. I had a question. I'll be back in a moment. The Dow's up 183, S&P's up down 21. We keep getting these spikes that fail. Is this going to be the case? And I'll be back in a moment. Basil Chapman, Tiger Technicians Hour, last segment coming up.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I see Steve Rhodes from the desk. Steve Rhodes said, Basil, SCCO, that's Southern Copper, loves DD9s, tops and bottoms. So Steve will probably talk about that in his show. That's a great observation. So I'm looking at this and I'm saying, for the question about Hood, I'm going to make a suggestion. It's at 46.74 right now. It's made it kind of a double bottom in the 1 minute chart. The 10-minute chart is trying to hold the 200 period, moving out for a 50-cent risk on a $45.76 stock. Less than 1%. I'm going to say start another position, but don't get carried away. Just a small position. Just have a little position with a 50-cent stop, 40 to 50, 45 to 50%. In other words, the low today is 45.33, it's trading at 45.71. You can make it 40, 45, and we'll see. I mean, then that means that if it does rally later in the week and you're taken out, it's okay. For 40 cents, for 1% you had, that's the risk that I would like. Why? Because if it's able today to close, we don't know, the day's young, but if it's able to close in the 46.50 area, that at least is saying it's trying to make that a bit of a bottom, a tradable bottom. All right, ESM25. I don't want to take too much time here. Yeah, so let me just do this. I'm going to finish this up by saying, question came in about, where was it? GME. So GME is GameStop. When I've passed the one in the Chestnut Hill Mall, I don't ever see anybody in it, so I don't know how they make money. So it's a meme stock, trading up 16% at 412 at 29.54 in a gap up leg C. This is called the gimme stock, because once it goes, people just say, give me the stock, give me the stock. I'm just going to say, if you're in it, would you buy it right now? Wow, if you want to just have a real quick trade in leg C, 29.41, just have a little tiny, I'd rather play an option on it. In the meantime, Dow's up 173, and I'm just